Hey everyone, it's Nick. In this video, I'm going to show you guys how I was able to make $72,000 in P&L yesterday from 3 separate trading opportunities I took. After fees and commissions, it came to just under $70,000 in one day off of all these trades. So let's go ahead and get right into it. When we go here to the chart, GBP AUD was coming off a major daily resistance zone. So the idea behind this is that maybe price will move from this resistance zone back down here to one of the major support levels such as this. So as that was occurring, what I did is I went to the H4 as I normally do, and I try to find good places to enter. Now, for example, something like this would be a decent opportunity to enter because price was making a new high. It made a little support right here, tried to make another high but failed here at this daily resistance zone. Broke below, came back to retest, and then on the retest, you can see afterwards that fell down. Now, I didn't take this trade. However, I got another trade. So as price was coming down here into the support zone, we broke below the support. We came back into the support zone and tested it as resistance. And then I took a sell whenever price looked like it was bouncing there at the resistance zone. I had a target of about 1 to 2. I actually closed it a little bit earlier. I've set up this little TradingView short tool in such a way where you can see what the actual P&L was. So it was just under a 1 to 2 risk to reward ratio. I risked $40,000 on this trade, trying to make around $80,000. And I left the take profit open and I didn't really set it because I wanted to be able to monitor it. And instead I just used alerts, waiting for price to make a new low. So let's go ahead and actually look at this trade. This trade was called yesterday in my trading group, which you currently cannot join. I'll let you know if I open up more spots for my group where I call these trades at. But this is it right here. So GBP AUD, you can see right here, I've got it just positioned here on the 1 hour chart so you can see a little bit more clearly. This was my trade I took. So again, this was a $40,000 risk. Excuse me, it was a $45,000 risk. So $45,000 risk. For a potential, anywhere from $45,000 to $80,000 of profit. And you can see I put no take profit in there. So what happened is after I entered, it started going into profit. It kept falling away from this area here. You see this was a support zone. We broke below. We came back and retested. And price started to go down. Very simple trade. Started to go into some decent profit. And then this was yesterday at 9:56 a.m. So from about 10 a.m. yesterday till about 9 p.m. yesterday, right? The trade took about maybe like 11 hours or so. Price then fell. We made the new low, and then that's where I closed there last night. So again, I've tried to represent it with this little short position tool here on the chart. And you can see that this was closed right here. It said at $67,000. And then when you factor in the previous trades I took throughout the day yesterday, it came out to be just under $70,000. Now, what I want to highlight here is I want to highlight the simplicity behind all this. The simplicity is such that all I do is I wait for price to get to a major support or resistance zone. And then when price is there, assuming the context is appropriate, this is all something that comes with experience. Price gets to the zone, it doesn't immediately smash through it, essentially. So price gets to the zone, it kind of has a pause. It looks like other people are taking profit there or even buying and selling there. After that, then I get into a trade. And all I do is I just try to make a little bit more when I'm right versus what I lose when I'm wrong. So I have days where I lose $50,000, I lose $100,000 in a day. And I have days where I make $50,000 to $100,000 or more in a single day, like I did last week trading. And all this is documented in my trading group. Whenever I'm doing this, my core focus is 2 main things. Those of you who've been following me for a while already know what these are, and they're nothing new. But I have to repeat them to make sure that you stick to them, because they're really the only thing that matters in trading, in my opinion. And these 2 things are, number 1, you have to keep things so unbelievably simple. So simple you could explain it to your dog and your dog would understand. Because if you keep things really simple, it allows you to make the same consistent, predictable, sustainable decisions day in and day out. You're not confused. It's not complicated. You're not second guessing yourself or questioning a million different things. You're keeping things quite literally so simple that it is very, very repeatable. And if things are very repeatable, what that means is that you're going to start to have a little bit more consistency in your trading. You're going to be seeing what you're doing that's working and what you're doing that's not working. And you'll be able to do more of what works and less of what doesn't. Simplicity is the best way to approach trading. You do not need to look at a million indicators. You don't need to look at a bunch of fundamental context. You don't need to look at all this other stuff that most people are looking at. Quite literally, simple black and white charts like I have. You'll notice I don't even color the candles. It's a black background with white candles. And with the simplified charts, just support and resistance. The idea that price bounces around these support resistance zones. It breaks sometimes, it bounces sometimes. As long as you're making a little bit more when you're right versus what you lose when you're wrong, all the stats work themselves out. That's the first thing, simplicity. Second thing is risk management. You have to structure things in such a way that when you lose, it's not catastrophic. It's not a nightmare. And you get to set whatever your risk tolerance is, right? If you're comfortable risking $10,000 on a trade, $5,000 on a trade, $1,000 on a trade, it becomes very, 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 very simple, because in your risk structure, you're positioning yourself in such a way that you just know long-term you're going to make more than you lose. Trading is really not hard, but most people lose money trading because trading is risky, and that's just the fact of the matter, right? Less than 5% of people actually make money consistently trading, and there's a good reason for that. You know, I should know. I've been trading for almost a decade, and I've made millions of dollars trading Forex, crypto, and stocks over the past 9 years. And over the past 9 years, I've noticed that one of the biggest reasons people fail, it's technically two reasons if you're being very, very, anal about it, keeping things simple and controlling risk. I noticed that most people don't do that. Most people have an insanely complicated trading approach. There's no predictability. There's no consistency. There's no sustainability in their decision making. Their decisions are all over the place. And it's not their fault. And if this is where you're at, it's not your fault either. You're legitimately doing your best, right? You're looking at all the information you see online. You're trying to figure out how to piece it all together. And it's really, really complicated. And it causes you to make all these weird decisions. And by the way, if you want my personal help doing this, then book a call with me. You can book a call with the link in the description. I have an entire coaching program. It's just a simple application, and then I'll hop on a call with you. And if I'm not free, my team will hop on a call with you, and we'll help you piece together a little, let's just call it like a roadmap to how you can get profitable trading by just keeping things simple and controlling risk. There's no fluff. There's not a bunch of complicated things. And, in my opinion, it's quite easy to be profitable if you're doing the appropriate things that are necessary to maintain long-term consistent profitability. I don't think it's hard, but again, that's just my opinion. I can't say that because most people do, in fact, lose money trading. But if you want my personal help doing this, you want to work with me and my team and be able to have us help you, just go to the link in the description, book a call with me or my team, and we'll hop on a call and we'll try to help you. The worst case scenario is that you just get some value from the call and it's able to kind of help you structure things a little bit better, so at least you're heading in the right direction. And then if you want to work with us more, then you can join the mentorship program, and then we can help you for like a month, 2 months, 3 months, however long you want, to help you structure things in such a way that you can be profitable long-term in trading. So whenever it comes back here to GBP AUD, you can see how I controlled risk is I just set a stop loss. You can control risk in a number of ways in trading. The simplest way to do it is just to set a stop loss. That guarantees that worst case scenario, you take whatever it is, the loss that you set there. And another interesting thing is that a lot of times you can get out of losing trades earlier than the stop loss if the context doesn't look good. I'm going to give you an example. You'll see down here there were two trades that I showed you up here. This buy and then this set of sells, that was one trading opportunity. This last trade that I made like 67,000 on yesterday that I just showed you, that was these 4 trades right here. But you'll see there was 2 more trading opportunities. I flipped into a buy and then I had sells initially. I'm going to show you those. Now, the first sell that I took on GBP AUD was right here. It was when price had gone really deep into this zone, pulled back up, and what I thought is that I thought we were going to see price fail here at this zone. And so I shorted the market right here, kind of taking it as a little bit of a breakout trade. That went into profit, but then it came back, and then it started like kind of channeling up here into this zone. So for example, you see all these little higher lows getting painted right here. On the 1 hour, you can see it even more clearly, but I'm keeping it on the 4 hour just to show you how simple it is. You don't need to be looking at a million time frames, especially when you're getting started. Keeping it to like a couple higher time frames is fine. Daily, 4 hour, 1 hour, maybe just the 4 hour and just the 1 hour, maybe just the daily and just the 4 hour. All kind of depends on your time constraints. And me and my team can work with you on that if that's something you want help with. As you can see, we started making higher lows. So what I thought is we're going to have a breakthrough back up here above the zone, because whenever price broke through and went into profit, came back to retest, bounced, came back to retest again, really deep, bounced, but then we started coming up here and closing higher. So what I did is I was in those cells initially. You'll see I closed those cells right there up here. It was about, after commissions, it was probably like $7,000 profit, $7,000 or $8,000 profit. You can see it's actually a 9K profit, but after the fees and commissions and swaps, it was like probably, like I said, $7,000, $8,000 profit. And then I entered a buy. So I entered a buy, and I'll actually show you where I called this out. We're going to go back up here. I'm long on GBP. So here we go. So yesterday at 7:23 a.m., these were the original sells I was in, right? So I was in a sell back here. Price had broke below, came back up, retested, and it started to look like it was going to go down and break out. So I entered a sell. My targets were much lower on that. You can see right here what I'm talking about, where I say price went deep into the zone, pulled back, and then started making all these little higher lows, right? To me, this looked like it was going to break to the upside. So what did I do? All I did was I simply closed these positions in profits. As you can see right here is $8,000 after the fees and commissions. And I said, I'm closing GBP AUD here. And then what I did is I went long on GBP AUD, and I risked lower, right? I risked lower. All of this is going to come down to experience. Once you get enough applied experience, you can start risking more on trades you think are more likely to work. And then you can simply risk less on trades that you still think are worth taking, but they may just not be as high quality of a trading opportunity in your opinion. It's just something that comes with experience. There's no substitute for chart time. And so on this, you can see that I bought right here. I had a stop underneath all these little recent higher lows. And then I had a target just right up here. So if that would have went up there to target, it would have been $15,000 of profit. Now, after I did this, you'll notice this was at 8:40 a.m. At 9:06 a.m., right? So about 30 minutes later, what I did is I exited the long right there. I exited the buy position. Long position just means a buy position. And this is where I exited. I exited right here. Now let's talk about exiting here instead of holding it all the way to the stop loss. A core tenet of profitable trading is that, provided you're structuring things very simply and you are controlling risk for every trade, a core tenet is that you should ensure that your beliefs about the outcome are represented by your actions in trading. So for example, let's do a very simple scenario like this on GBP AUD. My belief about the outcome was that price was going to break down below the zone. Okay, so initially I thought it would. That went into profit, closed it a little bit of profit. I then thought it was going to break up to the zone, so I closed my sells and then I entered the buy. And then whenever price started turning around and going to the downside, and I was looking at a combination of the higher time frames, the daily, the 4-hour, what I thought is, I'm like, okay, I now think it's going to go back down because price is pulling away from the zone again pretty quickly. So since my beliefs about the outcome was no longer that price was going to go up, it wouldn't make sense for me to stay in my buy and hold it all the way to the stop loss. The stop loss is there as kind of like a, final worst case scenario emergency. But the cool part is you don't have to hold it all the way to the stop loss. As long as you're closing trades in loss and keeping them small, whether it hit stop or whether you closed before, what matters is that you're only taking small losses relative to what your average winners are. And so you'll see that whenever I thought that price was going to turn back around to the downside, what did I do? I simply just closed the buy at a small loss. It is what it is, painful as it may be. I closed it at a small loss. You can see that small loss was only like $4,000 right here. So, after the fees, the commissions, whatever, it's $4,000. So I closed that buy position there. Oh, I'm sorry. This was it right here. So I closed it right there. And then you could see I immediately re-entered the short position. And again, this was only about 30 minutes after I had flipped into buys. There's a reason people who are profitable say you got to cut your losses quickly and you got to hold on to your winners. The reason is because if you're cutting your losses quickly, what that means is your average trade duration for when you lose is going to be shorter, again, generally speaking on average, than the trade duration for your winners. Because if you are in fact holding your winners longer by definition means that the time you're holding winners is probably going to be a little bit greater than the average time that you're holding losers. So in these winning trades, you can see that the last one I took, it took about 11 hours for it to play out. But my losing trade, I was only in that for 30 minutes, and then I just cut it. Just got out. It wasn't working, so I cut the trade. And then I got into the short position again and, put my stop above the zone, thinking that, okay, now this outcome is going to play out again since we're pulling away from the zone and rejecting it. I had entered that sell, then it came down here, and then, you guys know the rest of the story. It ended up going down here, making a lower low, and I closed it last night, bringing the total P&L for the day to pre-commissions and pre-swaps just over $72,000. Now, whenever you're controlling risk management means, sure, defining how much money you want to risk per trade. Yes. But risk management is also more dynamic than that. You get to look at the chart, you get to look at what's happening, you get to look at the price action as it develops, and use your discernment of that price action and your discretion, your intuition, your price action analysis to decide whether or not it's worth holding on to a winning trade. And this is something we work with our clients in our mentorship program. We work with our clients. We literally go into their trading journals and give them feedback and say, hey, we structure the trading journal with a Discord server so that me and my team can go in there and we can write messages to our clients and say, hey, this trade you took right here, your entry was below the resistance zone. So you sold below the resistance. That meant your stop had to be further, and that meant your target had to be further, thus making the trade duration longer and lowering the likelihood of you actually ending it in a profit. So we give feedback and say things like, whenever you're entering the trade, make sure you're entering at the resistance zone, because if you did that with the same stop loss, your profit target would have to be like half as far in terms of distance, and you still get like a 1-to-2 risk to reward ratio. And then it ends up increasing the likelihood of them making profit. And then on top of that, we also say things like, for example, let's say one of our clients shows us in the trading journal that they bought at a support zone. And my team and I go in and review our trading journals for all of our clients every few days, and then go and we put our own little feedback in there. We can see a person bought at a support zone, but then price started going sideways, and it was no longer having a lot of bullish rejection. Right? It just wasn't easily going up, moving away from the support zone. And they held the trade to the stop loss and ended up breaking. What we can then say is, hey, the next time you get into a trade and it starts going sideways like this, usually it's a better idea to just close the trade and scratch out, whether it's a small profit, small loss, or around break even. Trades that are not working should be exited as soon as it's reasonable to do so. And you'll learn what's reasonable after just doing this it only takes like 1 to 3 months to kind of get the basic experience. And then if you give it another 6 to 12 months, that's really a good enough time frame for you to actually see whether or not what you're doing is working and develop into profitability. And again, I can't make any guarantees here, but this is what I've noticed working with 4,500, actually more than that, 4,500 clients over the past 7 years that I've been coaching people on trading. And it's also what I've learned in my own personal experience of trading for almost a decade. You have to be able to manage trades dynamically, because that radically increases your win rate. And then on top of that, it increases your profitability. Because even if your win rate is shit, right? So your win rate's like 30%. If your average loss is like a third or a fourth of your average win, or your losses are like close to break even, but every time you get a win, it's like a full profit target, that allows you to make so much more money on your winners versus what you lose on your losers. But you have to be willing to cut those trades just like that. So that's what we do. Is one thing we work with our clients on one-on-one calls, and also and just getting in their trading journals with them and coaching them on saying, hey, this was a trade that was going sideways. Next time something like this happens, try to get out of it a little bit earlier. Make the loss smaller. Make it break even. Sometimes even a small profit, like mine yesterday on GBP AUD. It happened to be a small profit, and I closed it when I thought it wasn't working out. So being able to manage things dynamically is very important. And going back here to the chart, I want to wrap this up by saying it can be very, very simple whenever you're trading. So for example, here's what I'm looking at on GBP AUD right now. All I'm looking at is I'm looking at the next major zone that I think price would be likely to bounce at. And so, for example, this right here, I don't really even see anything close to current market price. Honestly, like the next clear area I see is down here. So we might have price come down here over the course of the next week or two, and then maybe like bounce there. We can get a buy. And there's also this major, daily 4-hour resistance zone up here. Now, something that could be interesting to trade is if price breaks this low right here, and then after it breaks that low, it comes back to retest it. If something like this could occur, then I could just get into a sell, going in, overall with this little like lower lows and lower highs and this little downtrend, if you call it that. And this could be a good sell, right? So if you enter, if price breaks this low, comes back up, retest, starts to reject a little bit, if your entry is somewhere here in the zone, and then your target's just like something like this, right? Your stop just has to go just above the zone. And then if it starts going into profit, then it, hits the profit target, you make 2 units of profit. But if you enter and then it starts going sideways right here, I'll zoom in so you can see this a little bit better. If you enter and then it starts going sideways, or making like higher lows, you can get out of the trade at something like that, right? And this is 1/3 of whatever it is you were risking. So if you're risking like $1,000 on this trade, you lose $300, $400, and then you're able to keep your losses smaller. And guess what? Say you lose that trade, and then it starts to look like it's like, it spikes really deep into the zone, but then it comes back really quickly. Well, you can always just re-enter the same trade, right? More or less, you enter the same trade, entry here at the zone, very, very close to the zone. You really shouldn't be entering too far outside of zones. It would just be better to wait and see if price happens to give you the fortunate move back into the zone, then you can just enter there in the zone, because then the risk structure is so much easier. It just works way better. You have a closer target. Your stop loss can be just above the zone, like this type of scenario, right? It's the same 1 to 2 risk reward as this first one, but the stats are just a little bit better because now it doesn't even have to move that far for you to be able to hit your full profit target. So getting out of trades early whenever they're not working is a very, very important thing. And it's something that we really drill into clients that we work with. We really help them understand, look, when you're in a trade that's winning, leave it alone. Let it go into profit. Let it run and run and run and run and run. It's a very counterintuitive thing to do because your intuitions will generally tell you, take the profit, close the trade, you've made money, protect it, protect what you have. But it's very, very maladaptive in trading to do that. It's better to just hold the winners, let them go to at least somewhere near your full profit target, and then you can close based on the context if you want. After seeing it happen a couple times, it generally takes a couple hundred trades and back testing and forward testing to be able to kind of decipher whether or not you should close a trade early, whether it's in profit or loss or anything like that. And then we also work with our clients on not only just holding winning trades to their final outcomes to let them come to fruition, but getting out of those losing trades early. Because again, even if you do that and you take loss after loss after loss, you have a shit win rate, 20%, 30%. If those losses are break evens or tiny, like they're like a fifth of whatever the stop loss was, you're getting yourself out of losing trades. And sure, some of them will end up turning around and going to the profit target without you, and that's a part of trading. But the ones that end up going against you, there's no loss to capital because you've already gotten out. You've closed at break even or small profit or small loss. And so we really work with clients on getting out of trades early. The way that I trade is so simple that literally in my mentorship program, there is one video. It's a 2-hour long video, but it is one video, and it shows every single thing that you need to do in that one video, step by step, with all the reasons, the science, the evidence, the logic, the rationality, the reasons behind it. Everything is unpacked in that one video. It's 2 hours long. It takes clients usually a day or two to watch it. It shows them exactly how to set up their trading journal. It shows them exactly what they should be doing on the charts, literally step by step with individual guidelines, do this, do this, do this. It shows them how to track their results in a very, very simple trading journal that we just use on Discord with me and my team. And then my team goes into it, and me or my team, again, we go in and we actually write you a message. We'll reply to one of your messages in there in that Discord server, and it's just you and it's just us in that server. That's it. No one else sees it. And then we'll actually write you messages and give you feedback based on your trades, so as what you need to optimize to do differently to get better. And this instant feedback loop, it prevents you having to go at this for years and years on your own, right? It prevents you from having to try this for 1, 2, 3, 4, 5 years. Like perhaps a lot of you watching this video have. Perhaps you've been trading for years and you're still not profitable. Maybe you're barely break even, or maybe you're just outright losing, right? It took me about 2 years to get profitable personally. And after I started tracking my trades, it took me 6 months to get profitable because I didn't track my trades for a little over the first year and 3 months or so. When I started tracking my trades in a simple trading journal, it was literally the notes section of my old Android phone back in 2017. I got profitable within a couple months. And that's just because I was able to see what was working and see what was not working. So that's why we have a timeline where we work with clients. We don't work with clients for a year or 2 years or 3 years. We work with clients for anywhere from 1 month to 3 months because that's all it takes, honestly. That's literally it. If you can learn all those basics there, what happens is you know what to focus on, and then you also know what not to focus on. So that way you're able to keep things very, very simple with that one simple 2-hour video. And then you're able to get coaching in an instant feedback loop, literally every single day if you want. Because we don't limit the amount of calls that clients can book with our team and me. We don't limit it, right? We don't say you get 1 call a week. You can book as many calls as you want with me and my team. And also, you can get unlimited help in Discord from us, in your server. You can ask us questions. We go in, we respond, we help you with it. We make sure that every single thing that you're doing is putting you on a path to where you're actually going to get and stay consistently profitable. I remember I had days where I would make like $300 in a day back in 2017, 2018, and I was jumping up and down. That was crazy because for me, going to work, making $8.30 an hour, my full day, right? You do even, this is before taxes, but like 8 times 8, like $8 per hour times 8 hours in my work day, I would make around $60 to $70 per day working. And again, that's before tax, so it wasn't even that much. So for me to make like 5 times that in one morning on a trading session and make $300, that was life-changing for me. I went from making about like $2,000 a month working my jobs to making like, $5,000 to $10,000 a month trading. And then I slowly phased out my jobs over the course of the next 2 years, and then I've been full-time trading ever since. And with that, you eventually get to points in your trading career where as you continue to scale, right, assuming you maintain consistency and profitability, which the only ways to get there is just by keeping things simple and controlling risk, it allows you to get to a position where now instead of having a day where you make like $300, you have a day where you make $3,000. Then you have a day where you make $30,000. And then you have days like me yesterday where I made like $70,000 in a day. Again, it's all here. Like everything's tracked live. I call these trades out live. And again, you can't join this server. We've got it closed for now, but where I'll be reopening this at some point. I'll post in a video if I'm going to reopen it or not. But you can see there's days where I make like $70,000 in a single day. And again, that's not to say that, there's some days where I lose 2-3 trades in a row. And I'll lose, $30,000, $40,000, $50,000 in a day or more. And that happens whenever you're doing it with higher stakes, right? But this is like you risking $100 per trade, and you have a day where you lose 2 trades in a row, you lose $200. But then you have the next day where you win a trade for 2 units of profit, and you make the $200 back in one day. And then say you have another loss the next day, but then a win. So you lose 100, but then you make 200. Now you're in profit on the week, net P&L $100. You just add more zeros behind it. I mean, there's days where, you can make like, 100 to maybe 1,000 to 10,000 to even $100,000 in a day. And again, I did this last week. There was a day where I made over $100,000 in a single day in P&L from a basket of trades that I took. And the ability for you to scale your trading is insanity. Now, again, I can't guarantee you anything. I don't know you. Like all I can guarantee is that I can teach you the same things that have worked for me and that have worked for the other clients that we've coached over the past like 7 years since we've been running my Mission FX, my company. I can guarantee you that we'll teach you all that, and we'll give you the same information that we gave to them, which has gotten a lot of other people profitable. It's still a small percent of people, but the way we're structuring the way we coach clients now is we have a really, really hard application process. People have to fit certain criteria, and then my team has to interview you on a call. We call it an onboarding session, but on the call, it's basically my team interviewing you to see if we even think we could help you. Because me and my team, after doing this for thousands of clients, we kind of recognize the characteristics between people who are likely to get profitable and people who are unlikely to get profitable. That way, we're not wasting other people's time if we don't think they'll be able to get profitable, because it's just a fact of the matter, right? Like over 9 out of 10 people fail at trading. It's a hard niche. But we can recognize when somebody has kind of the core components of what's likely to get them profitable, and then we can work with them to just help them get there quicker than they would have otherwise on their own. So again, I can't guarantee you anything, but I can guarantee you that I'll teach you everything that's worked for me over the years and everything that's worked for a bunch of clients that we've coached. And again, we've coached like over 4,500 clients over the course of the past 7 years. It's been amazing to be able to have worked with so many people, and it's been amazing to be able to make videos like this. And it feels so good to have days like today where I wake up and I'm now $70,000 richer than I was yesterday just because of, a couple simple decisions. Going to a chart, drawing a couple shaded rectangles that we just call support resistance, and placing some simple trades, and just to capture little tiny predictable moves like this, where price just breaks through a zone, comes back into the zone, and then bounces away. And then little moves like this and a couple series of very simple, easy decisions can generate, $30,000, $40,000, $50,000, $60,000, $70,000 or more in a day for me at the point where I'm at in my trading journey. So again, if you'd like help from me and my team, we'd love to be able to help you. Just click the link in the description. You can head to my website You could check out kind of like how our program works and everything. And then if you think that it might help you, then you could just book a call with us. Just go to the website, click the little button to apply. You could book a call with us. There's a little application there so that we can like see if we'd be able to help you, and love to be able to help you on a call so that we can set all this stuff up and put it into practice. So with that being said, I'll see you in the next video. If you enjoyed this video, I'm really happy about that. I really hope my content helps you. I'll see you in the next one. Bye.